Hello, we're going to get started here with the webinar today. Thank you everybody for joining the call and joining the webinar. But before we get started here, I've got a couple of housekeeping items that we're going to go through real quick. Number one, here's our legal disclosures. As you all know, all real estate investments are illiquid and involve a high degree of risk. There's always a chance that you can lose your entire investment as well, and past performance is not indicative of future results. You can also feel free to read the rest of this either now or later. For this presentation here, it's best if you're using either Google Chrome or Firefox. So if anybody would like to log off quickly and log back on using one of those browsers, it would be ideal. On the right-hand side of your screen, if you have any questions during the presentations, please type them or text them into the chat box on the lower right-hand side of your screen. We'll attempt to answer all questions during the presentations. If they're not covered, we'll follow up with an email. If there's time at the end of the presentation, we will allow folks to ask questions live, and by doing so, you will tap the hand on the upper right-hand corner of the presentation. Now, just note that this will require a Google plugin in order to download it, so you may be prompted to add a couple of items when that is the case. So without further ado, I am sitting here with Richard Dubey, who's the president and CEO of Triland Properties, and I'll be turning it over to him. Rich?
Good afternoon. This is Richard Dubey. Thanks, RJ. I'm going to take the afternoon, and I appreciate you being with us, to position Triland, what it is, what we do, and the three things that this webinar is going to deal with is why invest with Triland, why invest with grocery, particularly anchored retail grocery, and why invest in the Triland real estate funds. Now, Triland is a 40-year-old shopping center development company of which I own 100% of the stock. It's located in Chicago, Illinois. I'm going to take you through some of the background, but the first thing I'm going to do is ask to indulge us into a 5-minute video. What this video is going to show you is one of Triland's recent redevelopments and perhaps give you a better visual understanding of how we differentiate from much of our competition when we talk about redeveloping and repositioning retail shopping centers.
In this video, we're going to give an example of what Triland means by deep value add. It is important to understand that we just don't paint the pig or update parking lots or even update a facade. We truly reposition these centers and bring new life to them. In this example, we're going to show you how we took a 165,000 square foot shopping center and reduced the footage to a 150,000 square foot shopping center and still created a great investment opportunity for the investors. Population density is the key to success for our strategy. The more people that visit the site repeatedly allows us to charge higher rents for smaller spaces. And grocery works exceptionally well for this strategy because typically people will take weekly trips to the shopping center. Next, we apply our quarter cell analysis. This model helps us evaluate trade areas and store performance. It helps show the impact or the erosion from other stores within the network and helps project food sales from given locations. This gives us a quantitative reasoning for wanting to be in a particular trade area and can help us identify the actual piece of real estate within a specific trade area. We like Fridley Market because of its high density population in North Minneapolis suburbs, about 6 to 7 miles from downtown Minneapolis. It's located right off the Cloverleaf Exchange directly off University Avenue, or Highway 47. You can see that Highway 47 is a spine that runs north-south all the way alongside the Mississippi down to Minneapolis. University Avenue has service roads for 6 miles, so direct access off University is challenging. Interstate 694 and University Avenue both have great traffic counts, offering visibility to Fridley Market. Since it is right off the highway, it services both local and regional traffic, which is good for our tenant strategy. The property was situated on 15.5 acres and was about 165,000 total square feet. Cub Foods, the number one grocer in the market, occupied about 106,000 square feet. There was an inline McDonald's and a state-run Fridley liquor store. In addition, there was a 43,000 square foot Gander Mountain. What wasn't included was the Holiday gas station up on the northwest corner and the CVS located on the northeast corner. This property really outpositioned Home Depot. That just goes to show how difficult it is to get access on University Avenue. You will notice there are dual left turn lanes from University Avenue onto I-57, as well as easy access onto the property with 3 curb cuts. The Fridley Market property was well positioned, had great visibility from the expressway, and had easy access into the shopping center. The anchor tenant was Cub Foods, who occupied about 104,000 square feet. At the time, Cub Foods was building stores roughly about 65,000 square feet. So the Cub negotiation goes like this. We'll reduce the store to 63,000 square feet, and you keep the same annual rent that you're paying. The annual rent in which Cub was paying was $8 a square foot, which after reducing the size to 63,000 square feet, it brought up the rent to $17 per square foot for a 20-year term. To help reduce building risk, Triland put up the devising wall and Cub did their own interior remodeling. Also, Triland got its pro rata share for common area developments, which equated to about $1.5 million from Cub. Here we go. We put up the devising wall, which allowed us to cut back a portion of the store to allow for an outlot development. We did an $80,000 ground lease with McDonald's and had them build their own store. As you can see from the aerial, the shopping center is under construction and being redeveloped to maximize space. Here you can see new parking lots, updated lighting, and the new Cub Food store opening. Here's the renovated Fridley liquor store. As you can see, we're still renovating part of the shopping center while some of the tenants are open. We negotiated a deal with Duluth Trading Company, about 15,000 square feet right next to Cub. In the back of the shopping center, we negotiated a deal with Tapanaki Grill, which was an Asian buffet-style restaurant, for about 15,000 square feet. Here you can see the downsizing of the building back from 160,000 square feet to 130,000 square feet, which allowed us to build not only one, but 2 separate outparcels. One was for the McDonald's, and the second was for an 8,400 square foot multi-tenant building, which consisted of Caribou Coffee, Einstein Bagels, Sprint, Pancheros, Great Clips. These are roughly $30 rents and serve what we call street retail purpose, under 3,000 square feet, quick service restaurants, drive-thrus, coffee, etc., or Amazon-proof companies. Our biggest concern when trying to lease up was the visibility from University Avenue. So we did a deal with CVS to install a new pylon sign right on the corner. We built the pylon sign and paid for it. We agreed that CVS would be at the top of the sign, and we would put our street retail tenants below them. Our negotiation was successful, and it was a win-win for all tenants. There was a 2.5-acre parcel, which most everyone wrote off and said nothing could be done with. We ended up selling it to Woodbring Suites, a limited-service hotel operator, who built a 6-story, 105-key room hotel. They just wanted highway exposure, and this site was great for that. As you can see from the aerial, the property was redeveloped and enhanced with a hotel. So this is how you take a 165,000 square foot shopping center and reduce it to 150,000 square feet profitably. The property was purchased at 72% leased for approximately $14 million. We sold the property in December of 2016 at about 80% lease so that we left a little meat on the bone for the new buyers. It sold for $26 million, returning about a 28.3% IRR. And that is what Triland considers deep value add repositioning.
Okay, so when we started this presentation, I talked about the 3 objectives of the webinar. Why Triland, why grocery anchored retail, and why a Triland Retail Value Add Fund, which we're going to talk about at the end of the presentation. So the slide you're looking at now is before Triland. And I started my career when I was 12 years old working for 2 brothers in a small grocery store in the town that I grew up in, suburban Chicago, Berwyn, Illinois. I worked for those 2 gentlemen and learned everything there was to learn about the food business, from how to buy it, how to present it, and how to sell it at a profit. I did that till I was 18 in my senior year in high school, when I was introduced to a program that Jewel Food Stores was sponsoring. and you went to one of three universities in the United States. I selected Western Michigan University, which had a co-op program where you worked for 3 months out of the year, school for 3 months out of the year. You continued to repeat that process throughout 4 years of college. You graduated with a BS degree. Jewel Food Stores paid for 75% of your tuition and provided you these various opportunities throughout your 4-year career to be in every department within inside of a supermarket. Prior to graduation, if you were lucky enough in your senior year, you became a store manager. I was fortunate to have to do that. And in my senior year, I was then presented an opportunity to get my master's degree at Cornell University and continue on in food marketing studies for another 2 years. Subsequent to that, I went back to Jewel Food Stores, where I became a sales manager for half of a 150 store chain. Jewel Food Stores was the #1 market share leader in Chicago with 150 stores in those years. It remains the market share leader today. I ran 75 of those stores as a sales manager for approximately 1 year. Subsequently, I was asked to come into real estate, given the city of Chicago, and taught how to align supermarkets, how to identify supermarket locations, how to build the stores, and ultimately how to operate those stores. So I ended up building 6 stores for Jewel Food Stores in the city of Chicago during a 4-year stint as their real estate manager, and subsequently was given an opportunity to go to Toronto, Canada. I became a vice president of real estate and construction for a 150 store chain known as Loblaws Limited, which operated in the province of Ontario. Coincidentally, it was the same size chain as Jewel Food Stores, although Loblaws was a failing business. I went up as their VP of real estate and construction, stayed for 4.5 years, built 14 new stores, remodeled 10 stores, had a staff in real estate of 10 folks and 30 people in construction. So that background is where our differentiation lies in our understanding of the food business. So then we get to 1978. That's 4.5 years after being at Loblaws Limited, and I said I'm done with big companies and decided to start Triland Properties. That company today is 40 years old, based here in Chicago, currently employs 25 people. I'm the 100% shareholder. I had a partner here for 38 years who retired 2 years ago and bought his 20% of his stock back. Hugh remains close to us, although he's in a consultant capacity at the moment. And we've completed over 40 redevelopments. We're a full service company, acquisitions, leasing, construction, capital markets. We have real estate analysts here in town, in our centers, in our company, and human resources and accounting. This is part of the Triland team, the top team of the group. Collectively, some of these folks have been here 30 years, 20 years. There's a lot of depth here of understanding of disciplines and acquisitions. Our CFO, John Andrews, has been with us 30 years. Mike Slifka, our Director of Construction, 15 years. We have a VP of Leasing, Paul Sevenik. RJ Johnson, who's here in the webinar with me, is our VP of Business Development, and Denise Malotek is our HR Director. So, Triland's core business over the last 40 years has been to transform underutilized, underperforming retail shopping centers into environments that are productive. 90% of what we do are supermarket anchored, and you're looking at a series of companies throughout the Midwest and Mid-Atlantic and Southeast that are supermarket operators that have been involved in Triland's redevelopments. Similar to the video you saw, we have focused our attention on high-density urban markets, and our reason for that is higher the density, higher the sales volume, more traffic, higher the traffic, a little bit easier to lease space because of the amount of people coming in. You're looking at Catonsville, Maryland, an immediate suburb east of Baltimore, Maryland. And in the red is outlined Catonsville Plaza, a 3-story former Corvette's discount department store. Looking at the west side of that particular store, we purchased this 270,000 foot property, and it was 80% vacant. It really is 2 centers. You're looking at the west. You can see over the top of it to the east. The lower level was also various stores at one time, and what we did with this property was convert it into, on this west side, a 70,000 foot supermarket that still operates today under the name of Shoppers Warehouse Foods. And on the east side, which you can't see, is a 100,000 square foot discount department store. The next slide takes you to suburban Atlanta. And in red again is the shopping center that we purchased. The purpose of the slide is just to represent the population density that's around this particular property. The next slide illustrates what we purchased. This particular property, approximately 20 acres and 180,000 square feet, was almost 100% leased when we bought it, all with C, D, and E tenants. It was just an amalgamation of all types of users. Outlined in blue is the area that we targeted for demolition. And what you see in the next slide is what we converted this property into. So the big box in the middle of that particular photograph you're looking at is a 100,000 square foot Kroger store doing approximately $52 million in annual sales. We renovated the stores off to the top of the photograph and then created a series of outlets on the project, together with adding a traffic signal and left and right turn lanes to bring the traffic in and out of this particular center. The next slide illustrates where in the United States over the past 40 years Triland has successfully repositioned centers. So off on the left of the slide is Kansas City, Kansas, and Missouri. Up on the top left represents Minneapolis, St. Paul. Moving over to the right is Milwaukee, Wisconsin. Chicagoland is where there's a whole series of triangles. Then over to Indianapolis, upstate New York, Baltimore, Maryland, and Atlanta, Georgia. On the right of that screen is something that we utilize quite extensively called TIF funds, tax increment financing. And over the years, tax increment financing, we've been successful in raising about $60 million. And this is a form of economic development that is almost universal throughout the United States. They're called different things. Sometimes they're called TAD districts, tax allocation districts. Sometimes they're called empire zones. The bottom line is that they are all using real estate taxes to assist with the redevelopment of a particular shopping center or a particular property that's being underutilized. Let me take you through an example of how a TIF district operates. So in a shopping center of 100,000 square feet that was paying $1 a square foot in taxes, it would have an annual real estate tax bill of $100,000. Once we put our plan together and go to the assessor and assume for a minute we're going to spend $10 million, and make a further assumption that the $10 million investment will take the $1 a square foot taxes up to $4 a square foot per square foot, or $400,000 a year from the base of $100,000 a year. The difference between the two, $300,000, is then multiplied by 20 to 25 years, depending upon the legal definition of the particular state that you can utilize to benefit. So we'll use 20 years here as an example. And if you take 300,000 times the 20 years, it's $6 million. That $6 million is then underwritten and discounted back to today's value and can result in anywhere from $3.8 to $4.2 million of benefit that the developer can then use, and it can be bondable either sold as bonds and then used to add to the capital stack of the equity that's going into the project, or it may be known as a pay-as-you-go, and you collect that money on a quarterly basis throughout the year. So when we use TIF, we find that it enhances return. We find that it reduces the amount of pure equity. And the beauty of TIF is that it's paid back from the real estate taxes. And in shopping centers, the tenants pay the real estate taxes because they're net leases, and therefore the TIF money is ultimately paid back by the tenancies of the shopping center. In addition to our real estate redevelopment knowledge, we have used our understanding of the supermarket business and used it in strategic consulting with 8 companies in the United States. 4 of them are represented here on this slide. And how do we go about doing that, or why do we do it? It's really based upon a system that we developed back in Jewel Food Stores in the 70s with the assistance of the University of Illinois, where we developed a quarter-mile cell system. Basically what that is we took the population from the census material, we divided it into quarter-mile cells and then overlaid those cells across Chicagoland, creating about 22,000 cells. Of those 22,000 cells, we know what is inside of each one, how many people are inside of those cells, what the food potential is inside of those cells, and each of the stores, the supermarkets operating, we know what percent of their business is there and can ultimately figure out what the market share is per quarter mile cell throughout the 22,000 cells that overlaid Chicagoland. So we developed this model back at Jewel Food Stores with the help of the University of Illinois. And it's really big data before big data was even thought about. So we then applied that, since developing it at Jewel. Here at Triland, I took it subsequently up to Toronto and then brought it back here, and have used it in Kansas City, have used it in Minneapolis, St. Paul, have used it in Milwaukee and Atlanta. So it works in the United States, it works in Canada. It's a relatively simple means of understanding it, and that's why we got in the strategic consulting business by the food chains that have needed to expand their companies for various reasons. This happens to be the presentation of some of that data to a board of directors of the Pick and Save Corporation. You're looking at 2 aerial photographs. On the left is St. Paul, Minnesota. On the right is Minneapolis, Minnesota. And the purpose of these slides was to give the board of directors an overview of how many stores could be built over a 5-year time frame, and ultimately how much coverage each of those colored areas would have after the chain was built per our recommendations, how many capital dollars had to go into it, what their market share was, and how they covered the entire metropolitan area with the food chain. So as we look at the next slide, what we're talking about or illustrating here is how Triland over the years has sourced its equity. On the top of the slide represents what we've done in private equity Reg D private placements. Over the years, it's about $120 million. It started back in the early 80s with a firm in Chicago by the name of Mesro Financial, where they raised about $20 million for Triland Properties, and we did approximately 6 projects together during a 6-year period. Secondly, after being with Mesro and then growing the business with our own capital, we went back into the Reg D market with Chauner Securities, who raised about $70 million for us over a 10-year period. And then subsequently, Triland did about $30 million of its own Reg D private placements. In 2008, when we had the financial crisis that occurred in the United States, and we had a series of properties that required additional capital. Triland went out and sourced institutional capital from two particular partners. One, some of you may know, Sam Zell from Chicago, had a fund called ZCOF, Zell Opportunity Credit Fund, and he put about $30 million into 6 properties that assisted us with completing those, which went full cycle and sold in 2016. We had another group of properties, 4, which are still active, with a group out of Washington, D.C. by the name of Iron Point Partners. And lastly, you see the $62 million of TIPS, TADs, etc. that we spoke about earlier under the tax increment financing explanation of our redevelopment process. So why retail centers? When we all hear that the country's oversewered, people are changing their behavior and going to the internet, and technology is going to wipe out anything to do with people going to stores. We look at that as retail disruption, and that equals value add opportunity. So once there's disruption and people don't know what to do with the properties they hold or aren't sophisticated enough to understand how to get the economic development to help them reposition it, and or the tenants that are then going to fill those properties, we find it easier to buy the real estate and buy it at a price that allows us to reposition it. So this particular slide is showing you the type of retailers and users today that are active in the business, whether it's supermarkets like Whole Foods, who has now been purchased by Amazon, or Kroger, or Walmart Express stores, or Trader Joe's, or there's a slide in there by the name of Aldi, and let me just give you an example of their growth. Aldi basically came to the United States about 30 years ago. In the last 10 years, they have doubled their company. 10 years ago, they had 900 stores. Today, they have 1,800 stores. And that incremental growth of 900 stores represents 18 million square feet of new retail space. So there's a lot of demand from many, many users that are going to fill the spaces left by the shoe stores or the fashion stores that perhaps won't be quite as active over the next 5 to 10 years as they were in the previous 10 years. Now I'd like to talk about 2 of our funds. So the first fund that we'd like to share with you is the Triland Equity Investors Fund 3. Now this represents the 3rd time Triland has offered this type of product. And what this is a short-term bridge equity fund. We operated this particular investment from 2004 to 2006, and again from 2006 to 2008. This is a fund that's invested with a minimum of $250,000, and the investment is made with a letter of credit versus cash. The first fund, TLEI, returned about 21% to its investors on an IRR, and the second fund did about the same. Subsequent to the crash, we decided not to come out with Triland Investors Fund 3 until this particular year. So this particular slide shows that it's a $10 million fund. The minimum's the letter of credit of $250,000. It has a 30-month life, so it's a short-term real estate investment. It's for accredited investors only, and its offering expense is very low at 3.25%. The next fund, which is a bit more traditional, is called the Triland Valueadd Fund, which is in the bridge fund. We basically hold the real estate for a short period of time, and then it's either done with a joint venture, taken over by a joint venture, or it could be put into the Triland Retail Value Add Fund. The Value Add Fund is designed to be traditional from a smaller investment size of $50,000. Its offering size is $20 million. Its anticipated hold time is 5 years with 2 one-year options in the event we need to complete things before it's ready to close out the fund. It's for accredited investors. It has a preferred return of 7%. Management participation will be 30% after the 7% is paid to the preferred investors. And then after that, it's 40% to the developer after a 14% return has been achieved by the investors. Our partners in this fund are McLaw, Orchard Securities, Securities Transfer Corp., AI Insight, UMB, and our wholesaler, Peak Capital Solutions. So we find that each of these partners that we're using in this fund will be instrumental in administering things appropriately, properly, and giving us some comfort that that we're with the right group to get this achieved. So in synopsis, why invest in Triland? Because of our 40 years of experience in redeveloping retail assets. Why invest in retail? Because of the disruption we talked about creates value add opportunities. And why invest in retail funds? Our value add approach is tailored by our retail mindset. We have become students of retail and remain students of retail.
All right, Rich, thanks for your time. We were scheduled to go 30 minutes and we're just about there. So I think at this time we're going to wrap things up. I do have a couple of questions that were sent in that we'll answer via email and send it out to everybody so that everybody can see what type of questions were generated from this. But I appreciate your time today, Rich. And if you folks have questions about either one of the real estate funds, either TLEI3 or the Triland Retail Value Add Fund, please feel free to reach out to myself, RJ Johnson. My contact information is up on the screen there. And I appreciate everyone's time today. Thank you.